Let's talk about that guidance, the faith that many investors have in the second half of this year. Is that misplaced?
You know, management really doubled down on that calendar 2019 second half recovery, and this does seem to be the prevailing narrative across the industry. Now, you know, given our vantage, we typically like to take a longer-term outlook, and in our view, we think the firms and companies that are, you know, positioned for some of the nascent trends that, you know, are going to benefit these semi-firms over the next couple of years, whether that recovery is the second half of 19, whether it's the first half of 2020, I think if you make the right calls in the space, then as an investor, you should be relatively agnostic.
What would you steer investors towards away from Micron there, then, Abhinav?
So we really like the equipment space, actually, and this is kind of you know, interesting because they're obviously dependent on the likes of Micron spending, but in our view, you know, they're the arms dealers, the likes of, you know, KLA Tencor, Lam Research, Applied Materials. These are the companies that are selling the tools to make all these chips, and, you know, whether or not Micron wins a design of the iPhone or doesn't, you know, these equipment players are relatively agnostic, and that's what we like.
Abhinav, do you see a Micron-specific issue? Just to be more specific about it, is it a Micron problem or just a broader market issue?
It's definitely a broader market issue. If we think about, you know, cloud spending has taken a pause, inventories for graphics have been elevated, PC, CPU shortages. I mean, we've seen a laundry list of items that have been plaguing a lot of these firms, but in our view, you know, I think what you'll have benefit is that these downturns will be shorter in duration and also less severe, just given the end market diversity. And we do expect, you know, a shorter, I guess, pullback than what we've seen historically.